You know, despite everything you hear about the global economy, the UK, and London especially, is still this incredible magnet for international money. In fact, global investors aren't just staying put, they're doubling down. So what do they know that we don't? What's their playbook? Well, let's dive in and see what's really happening behind the curtain. When you think about international property investment, chances are this skyline is what pops into your head. For decades, London's been more than just a city. It's become a trusted safe haven for wealth. It's this one-of-a-kind mix of stability, a rock-solid legal system, and just sheer prestige that pulls in investors from all over the world.
And this isn't just a feeling. The numbers are absolutely mind-blowing. If we look at investors from the Gulf Cooperation Council, a whopping 99% of them say they're planning to buy more UK property or make their first investment within the next 5 years. I mean, that's not just confidence, that's practically a sure thing.
Okay, so that immediately begs the question, why? Right? In a world with so many options, what is it about the UK that makes it such an unshakable long-term bet for these really savvy global investors? Now this is what I find fascinating. Just look at the data. You see other huge cities, Tokyo, New York, Miami, they're kind of all over the place, jumping around in the rankings year to year. But London, it has been the undisputed #1 destination for 3 years running. That's not a fad. That's a core part of a global investment strategy.
And here's the real secret. It's about so much more than just the money. The appeal is about lifestyle and, well, peace of mind. We're talking about everything from the temperate climate to the fact that English makes business easy to having world-class universities for their kids. It's the whole package. Amazing flight connections, a culture they love, all sitting on top of a legal system they can actually trust.
All right, so we've kind of nailed down the why. Now let's really open up the playbook. Who exactly are these investors from the GCC? And maybe more importantly, how are their strategies changing as we speak? Get this, their confidence isn't just holding steady, it's actually on the rise. With all of the chaos and volatility in the world, an incredible 93% of these investors say their confidence in UK property has gone up in just the last year. For them, the UK is like a bedrock of stability in a sea of uncertainty. And this picture right here, it tells a huge part of the new story. For years, the mantra was London, 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 but that's changing. Now, the hunt for better rental income and new growth areas is pushing smart money way beyond the capital. The playbook is officially going nationwide. And we can see exactly where that money is headed. By 2025, the top targets outside of London aren't just random spots on a map. They're vibrant hubs in their own right: Liverpool, Cardiff, and Brighton. These are cities with lower buying costs, strong rental demand, and just a ton of growth potential. And this right here really drives that point home. Only 1% of investors said they would only look at London. Think about that for a second. That's a massive shift in thinking. The strategy isn't just about the capital anymore. It's a diversified national game plan. Okay, so you might be wondering, how on earth do they manage all of this from overseas? Buying multiple properties, dealing with everything? Well, it turns out there's a kind of secret weapon they use, a legal structure that makes the whole thing surprisingly efficient. I mean, really, think about it. How do you run a growing portfolio from thousands of miles away while protecting your assets and making sure your taxes are optimized? It sounds like a nightmare.
Well, the answer for a lot of them is something called a special purpose vehicle, or an SPV for short. The easiest way to think about it is like a protective legal box. It's a limited company set up for one reason and one reason only: to own property. And by doing that, it creates a legal firewall, separating the investment from all of the investor's personal assets. It's pretty clever.
And when you put them side by side, you can see why it's so popular. Let's just hit the highlights. Instead of paying higher personal income tax, the SPV pays the much lower corporation tax. And this is huge. All of the mortgage interest can be deducted as a business expense. Plus, it fences off all the risks so your personal wealth is safe. It even makes passing the property on to family way simpler. It's a total game changer. And what might sound really complicated is actually a pretty straightforward process here in the UK. You just pick a name, get a UK address, choose the right business code from a list, name a director, and file it with the government. It's a clear, well-trodden path to a much smarter way of investing. But of course, an SPV is just a legal tool, right? It can't find a tenant or fix a leaky pipe. That's where the other half of the how comes in. These big international investments are powered by this whole ecosystem of experts on the ground who make it all run smoothly.
And this ecosystem grew to solve a really big problem. You see, almost 40% of these investors said one of their biggest headaches was finding advisors who actually understood both the UK market and their home market. It's a specific kind of expertise, and that gap is exactly what this network fills.
So the industry stepped up. Big players have built these amazing all-in-one solutions. They don't just help you find the property, they'll also get you the mortgage, handle all the complicated tax paperwork for non-residents, furnish the place to a luxury standard, find a good tenant, and then manage the property for you. It's a completely hands-off turnkey service. And they can handle literally anything, from a slick, modern apartment in a new skyscraper to a classic townhouse on a quiet street. This network has the expertise to manage any type of property anywhere in the UK. It is a very well-oiled machine. So we've looked at the why, the who, and the how, but what does it all really mean? Let's zoom out for a second and think about the big picture here, because this goes way beyond just the world of finance.
Because at the end of the day, this isn't just about buying bricks and mortar. What we're really looking at is this incredibly sophisticated global system for managing and protecting wealth, where huge sums of money can flow across borders pretty seamlessly through these channels of law, finance, and expertise.
And looking forward, this chart is kind of like a wish list to the UK from these investors. The top of the list is no surprise, better rental yields. But look what's right behind it. They want more government incentives, simpler legal stuff, and better financing options. And what I find really interesting is this last one, a real demand for energy-efficient buildings. Sustainability is officially a key factor.
But you know, this whole relationship isn't just based on numbers on a spreadsheet. As Maysam Fazal from Al Ryan Bank beautifully puts it, it's like a golden thread built on shared values. It's that foundation of trust and friendship built over many, many years that really keeps this whole thing strong.
And that brings us to one last big question to think about. We've seen this invisible architecture of finance, law, and expertise that makes all this possible. So the question is, as global wealth keeps pouring in, how is this system shaping the skylines, the neighborhoods, and the very fabric of the cities we all call home?